Welcome back. You're tuning into Financial Fitness Northwest live on 1150 KKNW, where we help you navigate the mortgage and real estate market with expert advice from knowledgeable and trustworthy industry professionals. And we are here with Courtney Ahlstedt, and she is the Caliber Portfolio Lending Product Specialist with Caliber Home Loans. Yay!
Hi.
Courtney has 24 years in lending, banking, and business development, and her role with Caliber Portfolio Lending for business development and retail for Washington. Courtney graduated from WSU, and she's married with 2 kids and
A golden retriever.
a golden retriever. Oh, my goodness. I love that. And Courtney currently resides on the east side. Welcome, Courtney.
Hi, guys. Thanks.
Welcome. Thanks for coming.
Happy to be here.
Yeah, we're
Exciting.
so glad to have you and share some of these cool products and just what it all means to everyone. So can you just start by telling us really what is a portfolio loan? What does that mean?
Yeah, that's a good question. A portfolio loan is basically it's a lending term that we hear all the time in banking and real estate. And basically it means that there are loan programs that are out there for clients that don't necessarily meet the standard Fannie, Freddie, VA, FHA box, if you will, like the government boxes. So a portfolio loan is usually a loan that is designed to help folks that don't necessarily meet that box, but is not sold to an investor or sold to the government entities. So these particular products are kept in-house is basically what is how we describe them.
Right.
Yeah.
Right.
Yeah.
Okay. Like when you say sold to an investor, because, as a listener, they don't really know what that means. But when you're doing jumbo financing or any other kind of financing, you still have an investor guidelines that you have to adhere to.
Right.
Right. And in this case, we don't. They're just our guidelines and we're retaining the loan.
They are. That's correct. Yeah. So there's a variety of investors that are out there that will buy pools of loans. But these particular loans are just staying within Caliber, within our fund.
Right.
Yeah.
Okay.
Yeah. Great question.
So does Caliber, when those loans close, does Caliber service those loans?
Yes, they do. All of the loans are serviced at Caliber. So that's really, really convenient for the clients.
Yeah, that's awesome. They don't have to worry about being sold off the day after they close to somewhere else.
Exactly.
Yeah, that's great.
So what are the Caliber portfolio loan programs that we have, or the program?
Well, there's a suite of them. There's quite a few that are out there. They're all basically designed, like I mentioned, to be able to help clients that don't necessarily fit within that Fannie Mae, Freddie Mac box, or the VA box, or the FHA box, or an investor box, if you will. So we've created these suite of products to basically help these clients to get into home ownership that would have necessarily not been able to get a home loan.
Right.
Yeah.
Right now, maybe.
Right now.
They might have to wait.
They might have to wait, depending on what their circumstances are. Yeah.
Right. Okay.
Yeah.
So what, since you're saying these are out of the box, how would the rates compare on products like these versus if they were falling into a conventional box?
Yeah, they're going to be a little bit higher, I would say, than what you're probably used to seeing on a Fannie Mae or a Freddie Mac 30-year fixed or a VA. But we feel that they're priced fairly. We want to make sure that they can truly afford the payment.
Right.
With that being said, most of the clients that we're seeing that are in these loans have just something a little bit unique in them that we feel that the rate doesn't necessarily hinder the client by any means, because it's all about the payment affordability and the ability to actually get into a home now versus having to wait, 3, 4, 5, 7 years.
Right.
Things like that. Yeah.
Right. So it's really it's filling a need for those people.
Definitely.
And it's somewhat of a short-term need, correct? I mean, are most people looking at this as a way to move forward in this awesome market? And
And sometimes there is there's such a quick need, and I'm sure Jackie will talk about it later, is the way that our market is moving so quickly. Being able to come in and actually get a house now, knowing that our appreciation is going to be pretty solid, and I'm sure she'll talk about that too. But being able to get in and into a home now versus having to wait 3 years. Well, gosh, that house isn't going to be there for 3 days, let alone 3 years. So these products were definitely designed to help those folks get into the home ownership arena now versus having to wait and actually maybe even paying more.
Yeah. I mean, a ways out. We definitely have had clients that have done the portfolio products, and for them it makes sense because even though you're paying a higher interest rate, over time you're winning because you're buying now in this market, and with the appreciation and the cost you pay on rent, it makes sense all day long if you want to buy versus
Absolutely.
rent, right?
Absolutely.
Yeah, and rents are going up so crazy
Oh, my
too
gosh.
that at least you know what your payment is when you get into the home, right? As opposed
Yeah,
to being
that's a good
subject to
point.
increases.
Yeah, that's a good
Absolutely.
point.
That's a very good point.
So what really makes these products different than other lenders have jumbo and have their products, right? So what makes these different?
There's a variety of products that are available, and I would say just like with every client being different, the loans are going to be different based on their experience or based on their current situation, either creditworthiness or financially. But there's a variety of products. I'd say the one that we see the most of is for someone who is, like you said, looking to buy a house, maybe one of Jackie's, and wanting to buy a house and is in more of a jumbo space. So jumbo loan meaning, above conforming, above the high balance limits set forth by the government. And maybe they are completely well qualified. They have great jobs. They have a great down payment, but maybe they don't have the right FICO score. So the FICO score typically on a jumbo is going to be anywhere between, depending on the investor, is going to be anywhere between 720 and 740.
Yeah.
So if you don't have that score, you're likely not going to be able to get any financing. So even though you've got a great job and you've got your down payment and all that good stuff, that's very, very important because you don't have a certain FICO score, you may not be able to get into that loan. Thus not being able to buy the house. So these particular products, for example, help people with maybe some lower FICO scores, maybe still have great credit, but maybe just have a lower score to be able to help them get into that home.
Right.
So there's a nice variety of reasons. I could talk all day.
Yeah.
We don't have all day. I could talk all day about it, but that just kind of gives you an example that we just are looking for to help these folks that have been underserved, for a variety of reasons, whether it's a FICO score or a down payment or something like that.
Right.
Yeah.
And I think one of the big reasons too is, and that may be a reason they have a lower FICO, and that what I've come up against is, if they have some sort of negative credit, event that happened on there with them, a foreclosure or short sale, you have set waiting periods that you have to wait, which is 7 years for jumbo financing or conventional financing. It's shorter on government loans, but these programs are on like a tiered, basically, right? And so you could literally buy one day after an event.
Right, you could. So there are 3 products that we have available for someone who's going to be buying a house and actually living in it or buying it as like a second home.
Okay.
So we have one product that, like you said, if they had an event, whether it's a personal bankruptcy or a short sale or a foreclosure, that you could actually apply for the home loan the day after it's done. Then it moves into the next tier is a 2-year look back, and then the final tier we have is a 4-year look back, which is still 3 years less than it's still 3 years less than what you guys are experiencing with some of the investors for the jumbo category, which is super, super helpful for these clients.
Yeah, absolutely.
Super helpful. Yeah.
Okay.
Yeah. And then when they get back on their feet, and they get the seasoning, then,
they
being
just
able to
refinance.
refinance or if they're ready to move up or move out, then they're not stuck in it. They're not stuck in the loans by any means.
It's really a temporary solution.
It
and
is.
That's how most people I've experienced have looked at it.
Yeah, it is. And it is. And the key word there is solution. Absolutely. Solution.
So I know that people, from the financial crash that we went through with, that bad word that used to be around, the subprime, and some people might hear, oh, I can get a loan when I had closed in a bankruptcy yesterday.
Yeah.
That sounds like a subprime kind of thing. But tell us how these are not subprime.
Yeah, that's a terrific question because we hear that a lot. And we don't want to definitely have these products be known as subprime. We look at these loans individually. So, and what we always do, is we always have to make sure that the borrower that's applying for the loan has the ability to repay. That's a huge, huge difference between now and then.
Yeah, because they didn't have any kind of proof then, right?
They didn't have any of that stuff back then. And I think that subprime era is behind us, honestly. We look at these loans as solution-based loans that we're able to help clients get into homes. And, there are some differences between the fact of someone who maybe had a medical bankruptcy, that they just had way too many medical bills, or they had a really nasty, yucky divorce and something happened outside of their control. But they still make a great living and they really want to get into home ownership. We want to be able to help those clients, the underserved clients, to be able to get back into it. So I am very, cautious of that word subprime because we don't look at them as subprime because we have the ability to repay documented. We want to make sure that they give the loan consultant their pay stubs and their W-2s. And if they're self-employed, we want to see 2 years of taxes, all schedules, and profit and loss and all that good stuff. So, I mean, we're really trying to make sure that these loans, don't fall into that category by any means because they truly aren't.
Yeah, it just comes down to everything that we do, regardless of how the program may seem kind of an unbelievable gift, to be able to do that, but it's still responsible lending.
Oh, it's completely, and we wouldn't be in business if we didn't have responsible lending guidelines. We have to make sure that every single one of these loans is properly vetted.
Right. Yeah. It's not like a minimal documentation loan.
Opposite. Not state your income and we believe it low. No, we want to see that you actually have the ability to repay the loan that you're applying for. Yeah.
And so, I mean, this is a good solution for people that have had a negative credit history or an incident event, but it's also great for people that just maybe have creative income, right? Like asset depletion, right? So can you touch on some other things that our clients, scenarios that this would benefit?
Yeah. It's definitely not just about credit histories.
Right.
It's not about just, had a housing issue a couple of years ago. It certainly is about creative financing. It's about, if you have maybe a self-employed borrower who is almost at that 2-year mark, but not quite yet. Maybe they only have 1 year to file tax returns, things like that. Again, someone maybe with a lower FICO score. For our brothers and sisters who work at Amazon who really rely upon the restricted stock units, those kind of things can be used as far as qualifying. So we do try to make creative solutions available to our clients. Like I said, every loan is looked at stringently by an underwriter to make sure that they can qualify and have the ability to repay. But we do have certainly really great underwriting aspects that are tied to these creative programs.
Yeah. And also there's, down payment. You don't necessarily have to have 20% down for all these programs either.
Yeah. We just closed a loan not even a couple weeks ago. It was an awesome loan. The guy he had great credit. He had a great job. Had some money in the bank even. I mean, go figure, right? Money in the bank. But he just didn't have the down payment. He didn't have the down payment.
The 20%.
The 20%. And in certain cases, if you're doing like a super jumbo, like maybe above $1.5 million or close to $2 million on your loan, some of the lenders out there would like at least 20 to maybe even 30%.
Right.
So we were able to help this client get into this home with a 10% down payment. And it was wonderful. Yeah. Everybody was happy. He was happy. The agent was happy. I mean, everything was great. And so he was able to get into that home and start building a life for himself. So that's good.
It's fantastic.
Yeah. So really good success stories.
Yeah. So in those situations, how tell us a little bit about mortgage insurance, because generally anytime you put less than 20% down, you're going to have some type of MI, but we have some solutions with that too, right?
So none of the loan programs that we're going to be that we talk about in our portfolio suite of products has mortgage insurance. We have 90% is basically the highest loan to value that we offer. So the borrower does have to have some down payment in the game. It has to have what they call skin in the game.
Yep.
So, but we don't require third-party mortgage insurance to underwrite the file. The rate itself actually has a built-in for the MI for the risk, because usually it's a little bit more of a riskier loan if you don't put 20% down. That's why you need mortgage insurance. But on these particular loans, we self-insure them.
Wow.
Yeah, so that's really nice, and it makes it easier too as far as the underwriting is concerned, because you don't have another company underwriting your files.
Exactly, and also when you're thinking about your monthly payment, which because these products, the interest rates are not competitive, like in the they're not the same as up against a normal jumbo because they're different. Their portfolio, the rates are a little bit higher based on whatever program you do. But if you weigh out monthly payment, which is what everybody's is really important to everyone, is what the monthly payment is.
Yeah.
And if you were getting mortgage insurance on like a $2 million property, your payment would be a lot higher than this like self-insured, mortgage insurance with a little bit higher interest rate.
Yeah. And, I'll combat that too, because this is a true story for myself is, I honestly do not have a clue what my interest rate is on my mortgage, but I know to the penny how much my payment is because it's deducted out of my checking account at the first of the month.
Right.
So I know that I can afford that and that I can sleep at night. And that's what we're talking about here. It's not always going to be about the interest rate. It's about the solution to the problem. You know, there's not a loan program for you, Mr. Borrower, but we do have this alternative for you so we can get you into that house today. So it's the solution based.
It's so fantastic.
Well, thanks. Yeah, we like them.
Yeah,
We like 'em.
I've been successful doing
Yeah.
quite a few of these, and I know the
Yeah.
clients have just been so happy that they're able to buy.
Yeah.
It's not for everyone, for sure. It's not for everyone.
No, it isn't.
But it is a solution, and
It is.
that's what people really want, so that they can get the house.
Exactly.
So
Absolutely.
I know I've seen, which I always love to see these reports. I love to see your emails that you put
You're
out
so
each
sweet.
week. And no, it's great. And it really opens our eyes to how many different people we can help. But I love the stories when you say, hey, this person, you know, we were able to make this exception to get this through. And so tell us just a little bit like what, you know, what our flexibility is because it is in-house products. So we do have a certain amount of leeway with some things, right?
There definitely are always exceptions to the guidelines, but of course, as we talked about earlier, we have to make sure that we document the file well and have the ability to repay completely documented in there. But there are little exceptions that we can make based on the overall strength of the file. So we do feel that we try to make loans work more so than have them not work. Because we realize that everybody is unique and they have different situations. So if there's, you know, if you're 1 month shy of your reserves after closing, for example, you know, if you've got good compensating factors documented in the file, yeah, let's take a look at maybe doing that loan for you. Or, you know, if you know, have, I'm drawing a blank of another example, but we do definitely try to find other ways of making the loan work versus not making the loan work. But,
Yeah. I mean, that's what I love
Yeah.
most about it is just really it's like, I mean, as you said, we do have guidelines and it does have to, they have to prove the ability to repay and it's responsible lending. But at the same time, it's kind of more of a make sense situation too. So maybe they're a little off on one thing, like maybe the credit score's just a little bit lower, but they have like extra reserves. So we can kind of look at it from a standpoint of, does this make sense for this person? And, you know, and go that route.
And the other thing too is that all of these loans, I think that we've all been so used to, you know, automated underwriting.
Exactly.
You know, I don't know if you talked about with your audience about, you know, the DU and the LP or all these automated engines that we're all with. But with the portfolio loans, all of them are actually manually underwritten by a human being.
Yeah.
So they actually read everything with their own eyes and they take notes and they say, oh yeah, that kind of does make sense. Okay, I understand that. So that I think helps a lot too when you're looking for an exception. If you can truly explain a situation and have it make sense, I think that that's a really big thing.
I think that speaks volumes to why to work with a certain lender because, I mean, a lot of people nowadays are all about automated and, you know, oh, well, I can get this crazy rate on Quicken. Okay, well, are you really approved? Because you just enter your information from what you know and you think into the computer and it says, oh, here's your pre-approval.
Exactly.
No one's even verifying your information, which also is done with automated underwriting. We do verify. I mean, but having someone manually underwrite and review and read and I just think that makes all the difference.
It's a huge selling point because there are certain people, clients that are out there that aren't cookie cutter clients, and they really, you know, they need someone to actually, you know, look deeper into the situation to see if they can get a loan.
Right,
So,
right.
Yeah.
And a computer's not going to.
And a computer doesn't always.
It's not gonna, you don't get that personal touch with the computer.
Yeah,
right?
No.
It's just a no.
exactly.
Yes or no.
exactly. Exactly.
Well, thank you so
You're
much.
welcome,
Yes,
you
thanks for
guys.
coming
Thanks for
in.
having me.
It was awesome having
You're so
you.
sweet. Thank you so much.
When we get back, thank you for tuning in to Financial Fitness Northwest. And when we come back, we'll have Jackie Ramirez, a real estate broker with Windermere Real Estate. She's going to be sharing with us differences in buying resale property versus new construction. Any topics we discuss on our show today, you can find us online at www.financialfitnessnorthwest.com. Thank you.